or the first metric that I actually care about in a service-based business, are leads. So this one's super simple. I check on a weekly basis, and I check on a monthly basis, and I pretty much just look at just the number of leads that are coming through, and the channels they come from. So like an example of this would be like cold outreach, the ads, marketing spend, see referrals. And I know a lot of people will be like, well, exactly how do I know where I'm getting these leads from? Just ask them during the sales process. A lot of times I would just ask. And then obviously we have repeat business as well. And then the second thing that I focus on is actually the close rate. So this one's probably the most important. And this I look at as a percentage. So it's essentially how many of the leads are closing. And like the way I do it is percentage, and so like, yeah, let's say if we had 10 leads and you closed 3 out of 10, so that equals a 30% close rate. And literally our base, you want to at least be at a 25% close. If you're not at a 25% close, I think something else is broken in your company, so I think that's like something that you really need to know. The third thing that I actually focus on is your throughput. So what I mean by throughput is how many jobs you can actually get done. So like this is interesting because like let's say you're getting 10 leads a week, you close 3 of them, so you have 3 jobs to do. Are you able to fulfill the 3 jobs? And at what point do you have to start scheduling for the following week? So the point where so like the reason this is a bottleneck is like, let's say your sales reps get better or your sales process gets better and this jumps up to 5 out of 10, so your close rate is 50%. At that point, are you able to do 5 jobs? Because if you can't, then you know your bottleneck is here. You need to invest into human capital, right? So yeah, number 1, how many leads are you getting? Are you actually getting leads? That's your first bottleneck. Second bottleneck is what's your sales process like, and why aren't they booking with you? Do you not have authority? Do you not have any domain authority? Do you just have lazy sales reps? Are you taking too long to reach out to them? Is your service not as good as you think? Do you not have social proof? Things like that. And then there's your throughput. So this is sort of the back end. So like these 2 are strictly front end. These 2 are going to be back end. So your throughput is like, can I actually fulfill and complete these jobs? If you're unable to do that because you don't have crews, you have scheduling issues or whatever else it is, it takes you too long. Like let's say if one job takes you 3 days, chances are you're not going to be able to do these 3 jobs, and then you need to start investing into human capital. What happens if you add more sales reps? What happens if your leads double to 20 and you're still at a 30% close rate, but now it's 6 jobs that are booking in out of 20? So now you have pretty much double the work that you need to complete. And then the last one, and I think this is more for pretty much like the back end after everything's done. And another point on throughput, I check these metrics weekly, because that way you can be on top of things and actually fix them quickly. So like, let's say somebody does want to get booked in, they get booked in with you, and you're 1.5, 2 weeks out. I like to cap out the fulfillment at that. Like if you're taking longer than 2.5 weeks max to get there in a service-based business, like you really have to have a really strong brand so it can make sense why somebody's willing to wait for you, or B, you have to be so certain and be like the only authority in the business in your local market so that people are actually willing to wait for you. EBITDA. So EBITDA is pretty much earnings before interest, depreciation, taxes, and amortization. So like you have the price that you charge, so you have your total revenue, and then you have minus the cost of product, and then minus the cost of service, and then you have minus the cost of fulfillment rate. So like essentially in a service-based industry, this would be like the gas on your vehicles, insurance, etc., right? So you have the product that you're probably installing or selling that's a part of the service. The service would be like the human capital that you're paying. So again, this would be like employees. And then there would be the cost of fulfillment. So once you subtract all of that, you essentially end up with this right here, right? Calculate taxes separately. And essentially how you know this is like, I do this pretty much monthly. And the reason I do it monthly is because if you start doing it weekly, you're gonna drive yourself nuts just going through numbers and trying to figure out what's working and what's not working. So like, let me give you an example. Let's say you get 10 leads. I'll pick a different color here. Okay, so let's say you got 10 leads, for example. You got 10 leads. You're tracking all 10 of these leads. You know they came in. Somebody went and did a sales presentation. You reached out. You want to give them a quote. You did a phone or email quote, whatever it is. Let's say you closed 30%, right? So 3 out of 10. So now you have 3 jobs, and let's say your crew takes 2 days to do a job. They take Sundays off, so you're realistically only able to get 2 out of 3 jobs done. So you're about 1.5 weeks out, right? And now this is important because when it comes back to the sales process and they ask you how quickly you can get there, how quickly you can fulfill, that's pretty much your timeline, right? And then, like, that's where I really like to cap it off. So now I would put a star here and I would monitor this for another week or 2 and just see if that's really what's limiting me. I would make sure that I hire another crew. Easy numbers just to like kind of help you guys out with this. Like, let's say you are doing 2 out of 3 jobs for the month. You did 8 out of the 12 jobs that you booked in. So for the month you made $80,000, right? So you have $80,000 as your total top line revenue. And let's say fulfillment for the product was 3K per job, 3K for the service, and then $500 for the fulfillment. So let's say 3,000 times 8 equals 24K. 3,000 times 8 equals 24K for the service, and then fulfillment would be $500, and that's like your gas, insurance, and whatever, pulling the trailers, junk removal, or whatever other stuff. And then you'd be looking at times 8 again, you'd be looking at $4,000. So now you have, what's that, $52,000 of costs. So minus 52,000, and that comes out to $28,000 as EBITDA. So that's after you pay employees, that's the cost of your product, cost of fulfillment. So like this would also include like your office cost, gas, insurance, whatever other trailer costs that you have on there. And then you end up with the month at 28,000. And like the last part of it is like, you got to understand that after you minus all of this, you do owe taxes on this money. So realistically, like set aside money for taxes. So like, let's say every month, at least in like Canada, you'd set aside GST. And somewhere around the 15 to 20%. So like, at a certain point, I think if you do 500K in profit and up, you become a medium-sized business. So your tax bracket technically changes in Canada.